Those of you who are joining the class today, we have started a new topic, that is the final account of sole proprietorship. And when we met last week, we tried to understand or have ourselves introduced to the topic, where we were ready to understand that by the time we are done with this topic, all of us, including myself, should be able to equip ourselves with skills in the preparation of trading, profit and loss account, and a balance sheet of a sole proprietorship business from a given trial balance. We should also be able to calculate the cost of goods sold, gross profit, and net profit. Go ahead to explain the difference between gross profit and net profit, and then recognize the effects of this at the end of year adjustment on a final account of sole proprietorship business. Um, if you remember when we were learning um, principles of double entry, we look at accounting cycle, and then, or during the previous topic, we said accounting cycle begins from identifying sources from which informations are obtained from. We analyze these, classify these sources of information, and the first point of entry is to enter them into the journals, after which we post them or transfer them into the ledgers, use the ledgers to prepare the trial balance, that is the balances on the ledgers to prepare the trial balance, and hence use the trial balance to prepare the financial statement. And the financial statement, here we are looking at a sole proprietorship business, a one-man business, a one-man business that is interested in generating revenue. So he buys goods and sells goods. And this engagement, we call it trading. So if a one-man business that is a sole proprietorship is into trading, what account or financial statement does it need to prepare? So after we have used the balances on the ledgers to prepare the trial balance, we then use the information in the trial balance to prepare the financial statement. So for sole proprietorship, the financial statement that we need are the trading account, profit and loss account, and the balance sheet. So we try to understand basically what a sole proprietor, the final account of sole proprietorship business is about, what it entails. We saw that it includes the trading account, the profit and loss account, and the balance sheet. We went ahead and looked at the preparation, and then we look at the first one, the trading account, where we have said it is an account that is prepared to determine the gross profit or gross loss for a particular accounting year, where we said the gross profit is determined if sales is more than cost of goods sold, or we subtract uh, cost of goods sold from the net sales. We went ahead and looked at the items that are needed, that are used to prepare the trading account. So when we're preparing trading account, what are the items, information that are necessary or needed to be used in the preparation of the account? We look at opening stock, where we say it is the stock of goods that were unsold from the previous accounting year. So previous accounting year, if you are trading a particular stock of goods and the business was unable to sell all of them, those goods that were left unsold in the new accounting year, that is what they will begin the accounting year with. Before, when they buy new ones, they will be adding to it in the warehouse. So these stocks of goods are what we call the opening stock or inventory. We look at what it means. We went ahead. The next item was purchases, and then the purchases returns. We went ahead and look at the next item, that is carriage inwards. That is, we say when new goods are bought to be brought into the business's premises, there are some costs that is incurred or that are incurred in transporting the goods to the business premise. These costs incurred in carrying the good to the premise of the business, we say are called carriage inward, and no businessman or woman will want to throw this cost away. Definitely, before they determine the actual cost of the good, the businessman or woman will be adding this cost to the value of the goods purchased. So in a trading account, this is added to purchases. We look at wages. When we say wages, it is those amounts that are paid to workers in the stores. That is, I cited an example. For instance, if you have gone to buy goods and the goods needed to be loaded into vehicles, and then the vehicle have brought the goods to the premises of the business and they needed to be offloaded into the warehouse, there are people who will have to be needed to work in conveying, unloading the truck or offloading the truck. These people may not be permanent employees of the organization. So immediately they are done, the organization pays them for the work they have done. This kind of expenditure is wages, and no businessman will carry this cost and try to throw it out. It definitely will be added to the value of good that is purchased. So it is added and included in a cost in a trading account. We also look at sales. You sell good, and then sales return, you have problem, the customer have problem with the good, they definitely will return them. We have looked at all this when we're looking at the day book. We look at sales, we prepare the sales journal, use the total to prepare the sales account, and then the sales return. So the total balance on the sales return account is then subtracted from the sales value in the trading account. We have demonstrated how it is done in the trading account. So we have sales, we take away the sales return. I gave an example. So for instance, we said if sales value is 450,000 and customers have returned the good, we call that sales return. If the value is 75,200, then when we take that out, we will be resulting to 374,800. That value, we call it net sales. Net sales. We went ahead and looked at closing inventory or closing stock. What we said, closing stock, they are stock of goods that were left unsold at the end of the accounting year, goods that you are not able to sell. So if any of you, as you are at home, you are helping your parents in their stores, if you happen to be preparing account at the end of the year, when you're preparing financial statement, there may be some goods that are left in the store that you couldn't sell before the year ends. These goods that were left in the store and sold before the year is ending is what we are calling the closing stock or the closing inventory. It is also an information that is needed in the preparation of the trading account. We have looked at how it is demonstrated. We then went ahead and looked at the format of the trading account. So I will be taking my time to go over the format once more. Then we'll try to take some questions to understand how the format works. So trading account format. We have two types of formats. We have the horizontal format, and then we have the vertical format. The horizontal format is like a T account, where informations are put at the debit side and some at the credit side. And then the vertical format does not have two sides of the account. So you have one, all informations are put on one page. So we look at the horizontal format. So as an accountant, when preparing an account, the organization that you are preparing the account for its name must come on top of the financial statement. So the first thing you do is to write the name of the business. So that is the name of the business. What account are you preparing? That is the name that follows, the title of the account. And in this case, the account we are preparing here is trading account. And trading account is not prepared in the middle of the financial year. Trading account is usually prepared at the end of every financial year to determine the overall the gross profit or gross loss of the business at the end of the financial year. So after you have brought the name of the business, there is a need for you to bring the title of the account. So the title of the account we are preparing is trading account. So the title is headed trading account for the year ended. Trading account for the year ended. So at which financial year ending are you preparing the account? For instance, are we preparing the financial account at the end of the year 2012? If that is the case, then you'll be having trading account for the year ended 31st December 2012. If it is the financial year is ending September 2012, the days of September is 30 days. So the heading will be trading account for the year ended 30th September 2012. After which we underline. So we say horizontal format is like T. So we make our T under the heading. And then the currency that we are working in, we bring in the currencies. We are in Ghana, so we definitely will prefer using our currency, Ghana cedis. So we create two columns of the cedi of the currency at the debit side and create two columns of the currency at the credit side. On the debit side, you begin, so information items that are used to prepare the trading account, we have looked at them. The first item that comes is the opening stock. The opening stock, we said, it is that stock of goods that were left unsold in the business from the previous year. So now that the new accounting period is beginning, it is that stock of goods that is actually starting the business. You are starting the business with. So you bring the value of that stock that you are starting the business with. You bring that first. Now, if in this year you do not have enough of the opening stock, so you have bought new goods for resale, we call that purchases. The new goods that you have bought, you add it. So we say we add purchases. But we wouldn't add the purchases direct to the opening stock. The reason being that there might be some other costs that you have incurred as a result of buying the new goods. So those costs that are incurred, their adjustments will be made on the goods that have been purchased. Are we all right? So the purchases, the goods that have been purchased, if we have incurred any cost in conveying the good from the premises of the supplier to the premises of the business, we are calling that cost carriage inward. So we'll add it to the purchases. We underline the addition of it gives us a value. If it happens that the goods that we have bought, we have any problem with this good, maybe some have expired, maybe some are not up to specification, that is not what we have requested that should be supplied for us or to the business, or there is some damages that have been caused to some of the goods, the gentle thing to do is to return these goods to the supplier. This good that you have bought and returning, we call it purchases returns or returns outwards. So we will less it from this total, we will less purchases returns, the value of the good that we have returned to our supplier. When we subtract, what value do we get? We will get a certain value. There is a possibility that the owner of the business might have taken some of the goods that have been bought for personal use, or have taken some to give out for charity work, or have given some maybe to a family member. What will happen is that the value of the good, that the total cost of the good that you have bought will definitely reduce when some have been taken away. This we call drawings, but it is drawing in kind. If you remember, we look at when we were looking at drawings and the accounting equation, we said drawing come in two forms. It could be in cash, or it could be in kind or services. So drawing in kind is when the proprietor have taken a resource which is not cash nor check from the business for personal use. So if it is goods that have been taken, we are saying that the goods that have been purchased will reduce. So the good thing to do is to subtract it. So if goods have been taken for personal use, will less that value of the good taken. So will less goods withdrawn. We underline the value that we have come at the right under the value of the opening stock. That total, this total which I have brought, we call it net purchases. Net purchases. Net purchases. If I should want to name this, if I should want to name this and write net purchases against it, then I wouldn't have brought it in line with it. I would have dropped it to the next line so that I can write net purchases under the statement less goods withdrawn, so that it can match with that. But I do not want to do that, so I put it direct at the right under the opening stock. So that now gives us the adjusted purchases or net purchases. What to do is to add these net purchases to the opening stock. So we underline and add that value to the opening stock. When we add that, it now gives us the cost of goods that we now have in the store to sell. We have not yet started selling. We now know when we add the good that we have bought, the net, to what was in the store, it now gives us the total value of the good that is available for us to sell. So if any of you here works at your parents' store, you have some stock of good that you are selling beginning the, let's say, the day, and then your mother had left for the market and have gone to buy some goods and brought. He purchased the good. He has incurred some cost in transporting the goods. Maybe he came back and realized that no, some of the goods are not good. For instance, if it is milk that she bought, she realized that some of the milk were not good. So she has returned it. After adding the transportation cost in conveying the good, that is the carriage inward, use, and she has returned this good back to the supplier, the value of the good returned, she will subtract it. And then if she has taken some that, hey, you have not taken breakfast yet, take one mug, go and prepare tea, let us take. That is drawing. That is goods withdrawn. It will definitely reduce the value of the goods that is available for sale. So when you do that, what is left now will now be the actual cost of the new good that your mother has bought or your parent has bought. So she will now add it to the goods that were on the shelf in the store, which was the opening store. When you add it, that now give you the total cost of the good that you now have to sell for the day. So when we add this to the opening stock, we have what we call cost of goods available for sale. Cost of goods available for sale. Now, this is the cost of the good that your mother have handed over to you, or that you have as an accountant to sell throughout the accounting year. And then you have actually sold some. You have sold some of the goods. And then you want to determine how much of the good you have actually sold. To get that, the easier one way you can do it is to count the money of the good that you have sold. But what could happen is that you may have some challenges. The challenge you may have is that there might be some money that were taken, you have some, and others you may not easily recollect them. But the easier way to go is that now that you have total, you know the total cost of good that is available for you to sell. If at the end of the period you couldn't sell all of them, then the right thing to do is the stock of the goods that were left in the store that you were not able to sell at the end of the accounting year, we call that closing stock. Closing stock. The best thing is to deduct it. You subtract it from the total cost of the good that was available for you to sell at the beginning. When you do that, then you are able to get what we are calling the cost of the goods that you have sold. That gives us the cost price. The cost of the goods sold, we call it the cost price. All we are trying to arrive at, we remember, we said trading account is prepared to determine either gross profit or loss. If I should take your mind to mere mathematics, we look at businessman, we say profit is equal to what? Selling price minus what? Cost price. So in accounting, our cost price here is the cost of goods sold. Is the cost of the good before you sell them. So if you have actually sold the good, then you are going to match this cost price with the selling price. And if the selling price is more, then you will be having a profit, which you call gross profit. But if the cost price is more than the selling price, then you have loss. Then you will be having what we call gross loss. But in the absence of that, if you have incurred a cost that is wages on the day labors that are worked, after you have determined the cost of goods sold, you need to add the wages to the cost of the good that you have sold. When you do that, you have what we call cost of sales. Cost of sales. You don't go and determine your sales at the credit side. At the credit side of the account, you have your sales. These sales include both the good you have sold for cash or check or the good you have sold on credit. This includes both the good you have sold for cash and check and those that you have sold on credit. So when we are looking at day book, one of the day book was a sales journal which record credit sales. And then when we sold good for cash, we record it in a cash book. So in a sales account, we add both the sales that was recorded in a cash book to the total sales that was recorded in a sales journal. So the sales account in a general ledger actually is credited with both the cash sales and the credit sales. This total sale is what you are bringing here. That is the total sale you are bringing here. We call it gross sales or just sales. If it happens that the good that you have sold to your customers, they also have problem with the goods and they have returned it to the business, we call that sales returns, or in other words, returns inwards. The good thing to do is to subtract it. So we'll less sales returns, which is also called return inward. When we do this, we subtract, we want to name it, we take it to the last column and drop it on the next line and call it net sales. Net sales. We then match the net sales. This becomes our actual selling price with the cost of sale, which is the cost price. So in mathematics, we have profit is equal to selling price minus cost price. So here we are matching at the right hand side of the T account, the net sales with the cost of sales. If the net sales is more than the cost of sales, then the difference will appear at the debit side. That difference is profit. Since the sales is more than cost of goods sold, the difference is profit. That profit, we call it gross profit. So the difference is called gross profit. We have gross profit carried down. We'll add the two sides. It should be equal. So this is the difference for the two sides. We underline at both sides and add them. The value you have at the debit side should agree with the value at the credit side. We double underline to close the account, double underline to close the account. So this gross profit that we have carried down at the close of this accounting year is a profit, which will be sent to the beginning of the next accounting year. So we'll bring it down to the right hand side, gross profit brought down. Gross profit brought down. How about if the cost of sale is more than the net sales? Then we'll be having gross loss. That will be loss. In that case, then it means that there will not be gross profit, because we cannot have gross profit at the same time gross loss. So supposing we have matched the cost of sales with the net sales, and the cost of sales, which is the cost price, is more than the net sales, it means that we made a loss. It means that the debit side would have been more than the credit side. The difference would have appeared at the credit side. This difference, we call it gross loss. So gross loss carried down, we insert this difference. When we insert the difference, we add it, it should agree with the total at the debit side. So we underline both sides, and then total, double underline. The two sides should agree on the same line. This gross profit, which is carried down, must be brought down to the right hand side as gross profit brought down. So this is the format, that is the horizontal format for trading account. The horizontal format for trading account. The next format we'll be looking at is vertical format. But before we go to the next format, if my students have any question for me, please kindly raise your hand and then ask your question. Kindly raise your hand and ask your question. All right. If there is no question, then we will move straight to the vertical format. We will move straight to the vertical format. So, format of the trading account, we are looking at the vertical format. As usual, you cannot prepare an account without the name of the business. So the first thing we bring is the name of the business. We bring the title of the account. We are preparing trading account. So you are trading account for the year ended. Which year is ending, you add it to it. We underline the vertical format. We create at least 3 currency columns. 3 currency columns. Column 1, Ghana cedis. Column 2, Ghana cedis. Column 3, another Ghana cedis. So we create at least 3 columns. For the vertical format, it begins with sales. So what we have is sales. We bring the figure to the second column. If there is sales return, we less the sales return. What we'll be having, we'll underline the total should give our net sale. We drop it on the next line to the last column. We call it net sales. The next thing we do is to take away the cost of sales. The cost of sales. The cost of sales. Remember, if I should go back to the vertical format, what we have actually done is that we determine the cost of sales and subtract it from the net sales to get our gross profit or gross loss. So for the vertical format, what we are doing is that after you have gotten your net sales, yours is to go and determine your cost of sales or cost of goods sold and come and subtract it from your net sales and get either your gross profit or your gross loss. So after you have gotten your net sales, the next line is you write less cost of sales. Less cost of sales. The heading will also be less cost of goods sold, depending on. So when we are looking at more example, we will look at what point in time that we have to write less cost of sales or less cost of goods sold. So the cost of sales, how do we determine it? The determination is what we have done at the debit side of the the horizontal format. So with less cost of sales, to determine the cost of sales, we have the opening stock, which the figure appear at the second column. We add purchases as we have looked at earlier. So basically what we have done at the debit side of the horizontal format is what we are doing here again. If there is carriage inwards, we add. We underline the total. If we have returned any good purchase back to the supplier, we less it, purchases returns. we underline a value that we have. If it happened that the proprietor have taken some of the goods for personal use, that is goods withdrawn. It will reduce, so we will less it as well. What we have, we underline. The value you have go under the opening stock. We underline, we add this, which is called the net purchases, to the opening stock. What it gives us is cost of goods available for sale. We less closing stock. When we less closing stock, we underline, we have what we call cost of goods sold. If there is wages, we add. We add wages. What it then gives us is cost of sales. So don't forget, if we go back to the top, the one I have bolded, what did I write there? I wrote less cost of sales. Less cost of sales. So we are actually going to subtract the cost of sales from the net sales. So if we are arriving at cost of sales and we are going to subtract it from the net sales, we cannot put it under the wages, You know that will not be right when you are subtracting one figure from another. We have to arrange the figures properly. Even in basic school, that is what we do. Figures must be arranged under each other in ones, in tens, in hundreds, in thousands, and so on and so forth. And because we are asking that we are going to less the cost of sales, that is from the net sales, when we read the cost of sales, we bring it under the net sales. So we drop it on the next line because we want to name it, and bring it on the next line and subtract it. So we underline, we subtract. When we subtract, if the difference after subtracting the cost of sales from the gross profit, if the value we get is positive, then we call that gross profit. But if the value we get is negative, then we call that gross loss. So that is why I wrote the gross profit or loss. It does not mean that in working you'll be writing both gross profit or loss. No, you can only determine one at a time. You are either ascertaining gross profit or you are ascertaining gross loss. So if it is gross profit, you only write gross profit, meaning the figure will be positive. And if it is gross loss, it will be negative. It does not mean even here you write minus the figure. No, you just write the figure, but in words here you put against it gross loss. You will not put the minus against it. You just put loss there. Loss means negative. The loss means negative. You double underline to close the account. So this is how the vertical format of the trading account looks like. So as an accounting student, it is good for you to know both formats, how to prepare trading accounts using the horizontal format or using the vertical format. The reason being that because of examination, the examination question might limit you to a particular format that they want you to use. Should you prefer using the vertical format while studying and ignore the horizontal format? If the question now limits you or require you to prepare the account using the horizontal format, then you will be at loss. If you then use the vertical format, then you are violating the requirements of the question. You may either be marked down or you'll be marked wrong completely because you have not satisfied the requirements of the question. So it is good you try to understand both the horizontal format and the vertical format. The next thing we'll be looking at is to take a question and try to solve it applying the format. Try to solve it applying the format. So before, guys, do you have any question for me on the format? Because the next
No,
we'll be looking at
no,
is,
sir.
okay, then let us go and pick a practice question and try to solve it using the format. Here is a simple. So before we go there, let's look at some features of trading account. Actually, some features of trading account. So what is trading account about? One of the features is that it is a nominal account. Trading account is a nominal account. What is a nominal account? You remember when we're looking at uh, accounting equation and double entry, we say a nominal account is that account which is used to record revenue and expenditure. Revenue and expenditure. In other words, income and expenditure items. And when we look at trading account, it records information on income and expenses. What is the income here? When you sell goods, what you get from it is revenue. So the sales value is actually a revenue. And the cost you have incurred, the good that you are buying for resale, it is an a cost that you are incurring. It is an expenditure. So trading account, one feature is it is a nominal account. Why? Because it records revenue and expenditure item. Two, we use it to determine cost of goods available for sale. It is used to determine cost of goods available for sale. So when we're looking at the format, we came across this. It is also used to ascertain gross profit or gross loss. It helps us to determine gross profit or gross loss. Then it is prepared by trading organization. When we say trading organization, they are those organizations that are established for profit motives. They are established purposely for profit motives. They buy goods and sell. They produce goods and sell. So their objective is to make profit. What they do is trading. So trading account is prepared by only trading organization. If an organization is not trading, it cannot prepare a trading account. Then lastly, it is used to determine cost of goods sold. Cost of goods sold. It is used to determine cost of goods sold. So these are some of the features of trading account, features or characteristics of trading account. Now let's go now and look at an exercise. An exercise. A simple exercise just to understand a trading account. So here is it. Let's look at the following question. We say that following information have been extracted from the books of Ladies Wear Enterprise for the year ended December 31, 2010. The information is given are sales 2,200,000 Ghana cedis, opening stock 200,000 Ghana cedis, wages 100,000 Ghana cedis, purchases 1,344,000 Ghana cedis, carriage inwards 60,000 Ghana cedis, returns inwards 20,000 Ghana cedis, returns outwards 144,000 Ghana cedis. Then we have closing stock to the value of 400,000 Ghana cedis. Then we have information that goods withdrawn by the proprietor for personal use amount to 30,000 Ghana cedis. We are therefore required to prepare trading account for the year ended December 31, 2010. So this is a summarized question to help us prepare trading account. We have just looked at the format of the trading account. To help us not to forget, I will bring it back again. So we'll look at the horizontal format. Here is the format of the trading account. I don't know if my student can take few minutes of their time to see. I put the format here and the question is by it. If they can look at the format and the question at the same time and help themselves in preparing the trading account. However, going forward, you will not have the format available. This is just here because this is the first time we are looking at it to help you understand to see if you are able to. So, ladies and gentlemen, I am giving you only 5 minutes, not more than that, to look at the format and look at the question and see if you can prepare the trading account using the horizontal format. So please, uh, your time starts now. Thank you very much. So our time is up. I don't know if any of you is done already. Webu, are you done? Perpetual, are you done? If you are done, what do you have as gross profit or loss?
I don't know.
You are not done.
No. So give us 5 minutes again.
Nolin, Nolin, are you done? If you are done, oh, you are not done. How about Vinyu? Vinyu, are you ready
Sir,
with
please,
your
sir,
answer?
sir,
Hey,
please, no.
none of you. You are all very slow in preparing the statement. Well, I'm sorry, I cannot give you more time.
Sir,
Sydney,
this one, dear.
okay,
Sir,
let's go
no.
ahead. So we'll look at the question once more. So I've taken the format away. Now let's have a solution to the problem. Here is the question. The requirement is to use it to prepare trading account for the year ended December 31, 2010. We are using the horizontal format. We are using the horizontal format. The first thing to do as an accountant of our organization is to write the name. That is to write the name of the business you are preparing the account for, the name of the organization. And the name given in the question is Ladies Wear Enterprise. Ladies Wear Enterprise. So the next is to follow it with the name of the account. The account we are preparing is trading account. So it's headed trading account for the year ended December 31, 2010. Forget about the repetition. So trading account for the year ended 31st December 2010. We underline and create our T. So at the debit side, we create the two currency column. At the credit side, we create the two currency column. There is something that is happening here that I have not introduced you to, but I hope you understand. It's very simple. Having observed the figures in the question, I realize that they are all in millions. 3 zeros at the end of all of them. Can you see them? And if I don't have enough space, writing them, the figures or my handwritings are so big that I cannot minimize, utilize the page well. You are using a physical hand, the figures may interact each other, and this may not even help me to write in decimal. So since 3 zeros are at the end of every single figure, I decided to take them to the top. I decided to take them to the top against the currency. So it means that if I am writing the figures, I will not be writing in millions anymore. Supposing I'm writing a figure for sales, I only write 2,200 because I have already placed 3 zeros at the top, which is actually telling me it's in millions. All right, now let's get to the account. At the debit side, per the format, we will have to begin with the opening stock. So we'll look for the opening stock in the question, which is 200,000 Ghana cedis. Where we'll write only 200 because 3 zeros are carried at the top already. So we have opening stock, 200. The next is to add purchases. I add purchases. I am putting purchases at the second column because I need to do some adjustment on them. In the question, there is carriage inwards. I'll add the carriage inward to purchases, which is 60,000. But because I have carried 3 zeros at the top, I write only 60. If I add, I will underline and add. If I add the two, the result I am getting is 1,404 Ghana cedis. Or I can call it 1,404 Ghana cedis actually. The next, I have purchases returns, but here they give it to me as returns outwards, since that is another name. So I will less returns outwards. The value is 144,000. Once again, I have already carried 3 zeros at the top, so I write 144 Ghana cedis. I will underline and subtract. If I subtract, I have 1,260 Ghana cedis. There is good, the proprietor have taken some goods for personal use. The value of the good withdrawn is 30,000 as given in the question. I will less this good that is withdrawn, 30 Ghana cedis. There is 3 zeros carried at the top. I will underline and subtract. What I will have is net sales. I'll take it to the right under the opening stock. That gives me 1,230 Ghana cedis, or actually 1,230,000 because there are 3 zeros at the top. Before I proceed, this adjustment that have been made on purchases, that is adding carriage inwards, lessing return outwards, and lessing good withdrawn, any of these can come first. After purchases, I can bring less return outwards first, the value before I'll come and then add the carriage inward. It doesn't spoil the adjustment on the purchases, because whether I have 1 plus 2 minus 4 is the same as 1 minus 4 plus 2. So any of these adjustments that I have made on purchases, I can actually bring any of them first before the other. But if you prefer this, why not? You can go with it. Thank you very much. Let's continue. So we have net purchases of 1,230 Ghana cedis. We underline and add. We add it to the opening stock. What we have give us cost of goods available for sale, amounting to 1,430,000 Ghana cedis. There are 3 zeros at the top. Don't forget about that. Next is to take away closing stock. The value of closing stock in the question is 400,000. So I'll take it out. When I did that, what it gives me is cost of goods sold of 1,030 Ghana cedis, or 1,030,000 Ghana cedis. There is wages. So I'll add wages of 100,000 Ghana cedis. What it gives me is cost of sales of 1,130,000 Ghana cedis. I then go to the credit side and have my sales. My sales give me 2,200,000. I have carried 3 zeros at the top, so I wouldn't repeat it again. So I have 2,200 Ghana cedis. There is sales returns. I less it, 20,000. 3 zeros at the top, so I have 20. Underline, subtract what I have. I put it at the last column because I want to name it net sales. I drop it on the next line. The value it gives me is 2,180. That is 2,180,000 Ghana cedi net sales. Actually, I can prepare that same account that side this way. I can have only one CD column. I have my sales, take it to the last column. I take out my net sales return and direct. I have my net sales. There is nothing wrong when you prepare it this way as well. So you can decide to create 2 account columns, do the adjustment in the first column and send the net sales to the extreme right, or create only one CD column at the credit side and then do it direct. You have the sales, just put the sales return and the net sales right beneath it. So whether you go this way or you go with this, you are good to go. There is nothing wrong with it. Thank you. So having arrived at net sales, we then compare the net sales, which is 2,180,000, with the cost of sales, 1,130,000. You can see that the net sales, the value at the credit side is more than the cost of sales. So a difference must be inserted at the debit side to equal the credit side. So 1,130,000 is less than 2,130,000. So there should be a figure that we should be adding to this value to equal the net sales. The difference is profit. Why? Because the sales is more than the cost. The selling price is more than the cost price. So the difference is the profit. So if you take our mind to math, profit gives us a selling price minus cost price. So if you have selling price 2,180,000 and we take away cost price 1,180,000, the difference should be given as profit. That difference is what we are calling gross profit. Gross profit. So if we take away 1,130,000 from 2,180,000, the value, the difference is 1,050,000. That is called gross profit. So we call it gross profit carried down. We underline and add the two sides. If you agree on the same line, we double underline, add this side also double underline. That gives us the trading account. So we have answered the question. What we have arrived at is gross profit. We cannot have profit at the same time gross loss. So what we have is gross profit. We have satisfied the question. So the last stage for trading account is to determine the gross profit. So now that we have closed off the account, the next thing we do is to bring down the gross profit carried down to the other side as gross profit brought down of 1,150,000 at the credit side. So here is the solution to our problem. So what you have done yourself, since you were not done with the question or answering the question, the stage that you have reached, you can try to compare and see if you were actually on track or not. We can solve the same question using the vertical format. We're going to solve the same question using the vertical format. Whichever format you use, you have the same mark. So let's look at the same question using the vertical format. The same thing we have done. We look at the format. Here is the format for the vertical that we have done earlier. I brought it again for you to look at. So for the vertical format, we begin with sales. We take away sales return. The next is net sales. We take then we come and subtract the cost of sales, and the cost of sales is determined by all these adjustments that have been done beneath the statement less cost of sale until we have arrived at cost of sale, which is just above the gross profit, and we take it under and subtract to get gross profit or gross loss. That is the format. So let's see if we can solve the same question using this format that is before us. Good. So the question, vertical format, the first thing to do is to write the name of the business. The name of the business is Ladies Wear Enterprise. The name of the account, trading account for the year ended 31st December 2020. As I said, forgive me for the repetition of for the year ended. It wouldn't happen again. Let's move on. We underline and create 3 amount columns. So 3 currency columns. I have carried 3 zeros at the top just like I did for the vertical form. You can actually ignore it. It means that if you ignore, you are going to write the figures in full. You are going to write the figures in full. So for the vertical format, we don't start with opening stock, but we start with sales. The sales figure is 2,200,000. I've carried 3 zeros at the top. There is sales return or return inwards, 20,000. We did that. When we less what we have, give us 2,180,000. That is net sales. So this is the selling price. Ours is to now go and determine the cost price, which is the cost of sales, and come and subtract it from the selling price, which is the net sales, to arrive at either gross profit or gross loss. Since we are solving this same question as we have done using the horizontal format, we are expected to arrive at the same answer. So we less cost of sales. We do the calculation to arrive at that. The calculations are, we bring first opening stock. The value comes to the second column, 200,000 We have purchases, we add, the value comes to the first column, currency column, 1,344,000. There is carriage inward, we add 60,000. We underline, when we total, we have 1,404,000. There is returns outwards, we deduct 144,000. When we take this away, what we have is 1,260,000. There is goods withdrawn, we deduct 30,000. When that is done, we take the total under the opening stock, which is 1,230,000. These we are going to add to the opening stock to give us cost of goods available for sale, 1,430,000. The next is to take away the closing stock. When we take away 400,000, what we arrive at is a cost of goods sold of 1,030,000. There is wages. We add the wages of 100,000. When we do that, what we'll be arriving at is cost of sales. So we take it under the net sales, direct. Don't forget, we have said that less cost of sales. So this value, we are going to subtract it. We have named it less cost of sales at the top of opening stock. Now that we have arrived at the cost of sales, let us not forget we ought to deduct it. Just like we have done in the horizontal format, we have deducted the cost of sales from the net sales, and we have a positive figure, which we call the gross profit. The same thing we will have to do here. Now that we have arrived at the cost of sales, we less it, we bring it under the net sales, we deduct it. So 2,180,000 minus or less 1,130,000 should be giving us 1,050,000, just like the same value gross profit we have arrived at using the horizontal format. This is the end of the trading account using the vertical format. So we double underline. This figure should have come properly under this. Forgive me about that. But whilst you are doing it, please do the right thing by arranging the figure properly. It's not been done. I have not looked at it before uploading it. So here is the vertical solution, the solution to the question using the vertical format. So whether you have used the vertical format or you have used the horizontal format, you arrive at the same answer. But it is good as a student, you understand how the horizontal format is done and how the vertical format is done, so that at any point in time, you will be able to prepare the trading account using any of the formats depending on the requirement of the question, or if there is no requirement as to whether to use the vertical format or the horizontal format, you are free, you are at liberty to choose whichever format you want. But in practice, on the field, the most appropriate format that is being practiced is the vertical format. The most appropriate format, acceptable one now, that is being practiced and used on the field is the vertical format. So I would recommend that you are used to the vertical format and practice it all the time. However, master the horizontal format as well. So here is the end of the trading account. If there is any question, please ask. Otherwise, we'll move on to our next lesson, that is profit and loss account. My students will not ask me questions. Where are the rest? I can see that 2 or 3 people have left, or I'm not sure what the problem is, whether network problem or not, or they were not actually getting the thing, so they bought and had left. I don't know. but I don't think the presentation was boring. Well, if you don't have any question for me, then let's move on to look at our next lesson, that is profit and loss account. Profit and loss account. So what is profit and loss account about? Profit and loss account is the account that is prepared to determine the net profit or net loss for the accounting period. Trading account was prepared to determine gross profit or gross loss. But trading account is prepared to determine net profit or net loss. How do we arrive at the net profit? Net profit is arrived at by comparing or matching all expenditures that have been incurred during the selling of goods and services with all the revenue that have been earned, the total revenue that have been earned during the trading period. Now, if the total revenue earned, apart from gross profit, other revenue that have been earned, which we add to gross profit, the total of it exceeds or is more than the total expenditure that have been incurred, then the result is what we are referring to as net profit. Net profit. On the other hand, if the expenditure incurred happens to be more than the total revenue earned, then the business has made a loss. And this loss is what is called net loss. Net loss. Net loss. So in practice, the profit and loss account starts with gross profit on the credit side. So the gross profit that we have determined when we were using the horizontal format, we have gross profit carried down, which was a difference at the debit side, and we brought it down at the credit side as balance brought down. That balance is the balance that begins the profit and loss account. So that brought down begins the profit and loss account. So when you open a profit and loss account, you enter it at the credit side as the first entry if there is gross profit. The same way we look at the format, if there is gross loss, when we look at the horizontal format, it was a difference that appears at the credit side of the trading account. So what did we do? We brought it down after closing of the account at the debit side. So when you are preparing a profit and loss account and you have incurred a gross loss in the trading account, the gross loss will begin the profit and loss account at the debit side. So the trading account, the profit and loss account, actually all incomes are credited to, or revenues are credited to the profit and loss account, and expenditures or losses are debited to the profit and loss account. So after that, what happens when you bring the gross profit? All other revenue income that you have earned during the period, they are also credited to the profit and loss account by adding it to the gross profit. And all expenditures that you have incurred during the period, or the business have incurred during the period, they are included at the debit side of the profit and loss account by adding it to gross loss if there is any. At the end of the period, the total income that is at the credit side is compared with the total expenditure at the debit side. If the income that is the credit side is more than the debit side, there will be a difference appearing at the debit side. That difference is what we are calling net profit. Net profit. However, if the debit side, that is the total expenditure, if it exceeds the credit side, that is the total income, then we made a loss. The difference there is what we are calling net loss. This net profit that we have ascertained increase the capital of the proprietor. That is why when we were looking at the balance sheet, The net profit is added to capital in the balance sheet under finance by, if you remember. So you as the owner of a business, if you put money into a business, any revenue that you earn come to increase your money. If you put 5 cedi into a selling of toffee, and at the end of the day, you have the total value of the toffee sold is 12 cedis, it means that you have made a profit of 2 cedis. What do? You add it to that 5 cedi, and you have made a revenue of 7 cedis. Then that 2 cedi element on it is a profit to you. Do you throw it away? No. You add it to the 5 cedi that you have invested. So net profit, capital account we know has a credit balance. So the net profit, if we are applying double entry, this net profit is credited to the capital account. So in practice, we add it to capital in the balance sheet. On the other hand, if it is a loss, the loss would have reduced your money, the capital invested. So in practice, you applying the double entry, it is debited to the profit, the capital account. But in the balance sheet, it is subtracted. That is what you see as less net loss. Less net loss. Profit and loss account continues. The next thing we want to look at is those expenditures that are used. We said that in the profit and loss account, at the debit side, we enter all expenditures, and at the credit side, we enter income. So what are some of the expenditures that are used in preparing the profit and loss account? We are going to look at them. So below are the items of revenue, expenses, and losses that we use to prepare the profit and loss account. Some of the expenditures are called administrative expenses. Administrative expenses basically are those expenditures that are incurred. Whether you are selling good or you are not selling good, you automatically will incur these expenditures. Whether you are selling good, you are trading or not, since the business is existing, you are bound to incur these expenditures. Examples of these expenditures are lighting in the office. We can call it electricity. Whether you have opened the shop to sell goods and services or not, when night falls, what happens? You light up the premises of the business. So energy will continue to be consumed. If you do not go, it's only the security man that is there. When night falls, what happens? The security man will light up the premises of the business. So at the end of the period, electricity bill may come for you to pay. So it is an administrative expenses. You may also call it light and heat. The next is rent and rates. If you have rented the premises of the business, whether you are trading or not, the landlord will not wait for you to sell good before you come and pay. The rent continue to run. It is an expense you have to pay. Rates are property rates that are paid to the government. So if it is paid, it's an expenditure. Whether you are trading or not, since you own the property, you are bound to pay that. Salaries that are paid to workers, printing and stationery, postage, legal expenses, audit fees, depreciation of assets, insurance of assets, all are expenditures that are administrative expenses. Other expenditures include selling and distribution expenses. So whilst you are selling and distributing goods, you are bound to incur certain expenditures as a result of making the goods available to consumers. Perpetua, are you sure you are with me, or you are dozing off? And there is somebody by you that is making you laugh. There's somebody by you that is entertaining you. All right. So selling and distribution expenses. We have packaging expenses, commission paid to agent, salesman salaries and commission, advertisement, export duties, carriage outwards, bad debt, maintenance of vehicles, insurance, maintenance of vehicles for distribution of goods, and insurance of your stock. You insure the stock, whether it is in premises of the business or they are in transit, you are transporting them. Insure them so that when they get damaged, the insurance company can come to your aid and compensate you. This is also an expenditure. There are many more. I have just brought some. There are another group called the finance charges. If you open a bank account and you have kept some monies there, the bank may charge you for some services that you are rendered unto you. We call that bank charges. If you have run promotion, allow some discount, cash discount to your consumers for buying and paying promptly, that is discount allow. Your money reduces, your revenue reduces, it's an expenditure. If there is any loan you have taken and you pay interest on that loan, it is an expenditure to you and others. All are regarded as financial charges. They are expenditures to you. Then finally, we look at some of the income that are credited to the profit and loss account. Then we'll bring our lesson for today to a close. Examples of the incomes are discount received. These are discounts received by paying promptly for goods that you buy from your suppliers. Interest that you have earned or you have received, maybe on your bank account, you put money there as a business and you have earned some interest on that money, it is a revenue to you. You have received some rent from subletting your premises. To sublet a premise means you owe a premise for a business, but you have rented part of it to somebody else to also use. You owe a business premise, probably it is too big for your use, so you decided to rent part of it to somebody. That money the person pays rent, it is not an expenditure, it's actually income to you. So when you receive that, it is a revenue or income. Interest on fixed deposit, you have kept some money in your fixed deposit account and it is bound to generate some interest. If this interest is earned, it is a revenue to you. There is some investment that you have made. If you have earned some income on them or interest on them, it is revenue to you. If you have received some commission, if you have made provision for bad debt and it is less than what you have actually made, it's a revenue to you. And other miscellaneous expenditure. Maybe you have newspapers, you have been buying newspapers and then they are becoming trash in your office. You decided to sell them to the KVIP operator, the toilet. You take them there and say they give you something small. It's revenue. You have some magazine, business magazine, and there are many in the office. You decide to sell them off. You get some revenue from there. All these and other revenues, they are all added to gross profit and are credited to the profit and loss account. So at the end of the day, all this income, the total is compared with the expenditure to arrive at either net profit or loss. So these are some of the items that we use in the preparation of the profit and loss account. The next time we'll meet is to look at the format of the profit and loss account, after which we'll move on to merge the two accounts, that is merging both the trading account and merging the profit and loss account, which the heading will change to trading profit and loss account. So answer the question you have asked last time. I told you don't worry, relax. Gradually we will get there. Hopefully when we meet next week, we will be reaching there and your question will be answered. So ladies and gentlemen, here we have come to the end of today's lesson, but I will once more pause here for you to ask any question that you have. But if you do not have any question for me, then I will say thank you for your time, and hopefully next week we will be meeting again to continue from where we have left off. So waiting for any question from my student. Interestingly, my students have understood perhaps very well, excellently, the discussions we have had. So they don't have even an iota of question for me. If that is the case, then thank you for your time. I am glad and I have enjoyed the discussion myself. I believe you have enjoyed it too. Please take care of yourself, obey your parents, study hard until we meet again. Lord willing, next week, same time.